Hello! This time, I would like to introduce 5 important points in investing, based on the book The Elements of Investing by Burton G, Malkiel and Charles D. Ellis. This book is packed with valuable information for a wide range of readers, from novice investors to experienced ones. I highly recommend reading the book if you're interested. The first point is that passive investing is optimal. The author argues that passive investing is optimal in the long run. It is important to diversify investment targets such as stocks and bonds over the long term and adopt a hold strategy. For example, buying an index fund linked to a representative stock price index such as the S&P 500 and holding it for the long term is an example of passive investing. By adopting an investment strategy that reflects the entire market, stable investment performance can be expected. The second point is that risk and return are in a trade-off relationship. In investing, risk and return may be in a trade-off relationship. That is, there is a possibility that returns may decrease in order to reduce risk. Therefore, investors need to set their own risk tolerance and adopt an investment strategy that matches it. For example, young investors can take risks and aim for high returns in the long run. On the other hand, as they get older, their risk tolerance decreases, so they may consider shifting their investment targets to stable assets such as bonds. It is also important to choose investment trusts or ETFs that match your risk tolerance. The third point is that portfolio diversification is important. The author argues that by investing in different asset classes such as stocks, bonds, and different markets, risk can be diversified and investment performance can be stabilized. For example, by investing not only in Japan but also in overseas markets, you can diversify your portfolio. In addition, by investing not only in stocks and bonds but also in real estate investment trusts, REITs, and commodities, you can diversify the risks in your portfolio. The fourth point is to pay attention to investment costs. In investing, fees and costs can have a significant impact on performance. Therefore, it is important for investors to choose low-cost investment trusts or ETFs. For example, choosing investment trusts or ETFs with high fees can lead to lower performance. Additionally, regardless of performance, investors need to pay annual costs such as trust fees, which can accumulate over a long investment period. The fifth point is that remaining calm and not being influenced by market fluctuations is important. In investing, temporary losses can occur due to market fluctuations. However, it is important for investors not to be swayed by market fluctuations and to make calm investment decisions. For example, there were significant drops in stock prices due to the 2008 Lehman shock and the impact of the COVID-19 pandemic in 2020. However, if panic selling occurred during these periods, large losses would have been incurred due to subsequent stock price increases. Therefore, taking a long-term view and making calm judgments unaffected by market fluctuations is important. The above are some of the points introduced in The Elements of Investing. In investing, it is important to find an investment strategy that suits you and to deepen your knowledge about investments. Additionally, investing involves risk, so it is important for investors to understand the risks they can bear before investing.